гаснет, а в голове только ты. Я потерялась между окнами, между чужими голосами, и думаю снова, а что такое любовь? Я ищу свое сердце, ищу свои мысли. Ночь ведет меня дальше, но я не нахожу. Шума гаснет, а в голове только ты.
Alright, but today is the 27th of May, being a Wednesday. And in relation to the economic calendar, we had no high impact news today. So simply just going to be taking a look at the 3 trades that I took during today's session. So one during the pre-New York AM, and then the other 2 during the New York AM session. So jumping into the first trade, session pre-New York AM, we are at all-time highs, engaged with that 30,250 level. Hour 1 London standard deviation, buy side projection for us to locate that point of inception for sell side delivery motion. We had an M1 standard deviation for sell side projection, and then the PD arrays utilized for the entry was an M1 inversion fair value gap as well as the M1 SIBI. And I was simply just looking to target a TLP. So taking a look at the trade, really not much framework to it, to be quite honest. And if I'm being even more honest, this really isn't the best of trades. Yes, even though it does deliver a third of what I was looking to see delivered, it's not really the best of trades because the M15 and the M5 lacked framework. The same, again, like yesterday, I was framing for the high of the week. M15, M5 do not serve structure here to be the high of the week. This structure was only served for a retracement down to engage with this low, which was the high of an M15 BISI. Now, I actually wasn't paying attention to this trade. Once I entered, I went about my day and started doing other things until I got the notification that we engaged with that M15 BISI high. And then, yeah, the next candle quite literally just delivered up very, very aggressively. But taking a look at the analysis, hour 1, the -4, -4.5 standard deviation. This is anchored from London, so being that same standard deviation we used for yesterday's trade to take that short, from this candle's low all the way up to this candle's high, -2, -2.5, -4, -4.5. This is where we took that trade during the pre-New York AM session for that sell-side delivery motion. You can even take a notice of the fact that even though I was taken out of this trade during this candle, the bodies are still being very respective of that -4, -4.5 level, as well as the 30,250. We're not seeing price action being very aggressive around it. It's being shy. We're not looking to displace above it in an aggressive manner. And then taking a look at the M1, so the red lines would be the -4, -4.5 standard deviation on the hour 1, simply just projected out in time. Cracking correlations present itself, and then we have, that is blurry. We have the inversion of this BISI, and we deliver away from it. I had a limit here on the inversion, and once we formed this swing low and we began retracing back into the range, I measured from this candle's high all the way down to this candle's low. OTE measure was in alignment with the inversion, but I simply just looked to move my limit down to the SIBI because the point difference was only 2 points. I speculated there may be a chance that we don't actually deliver into the inversion. But get tagged into the trade, we have that deliverance down towards sell side, looking to target this TLP as well as this TLP right here. This TLP would be the high of an hour 1 imbalance. So looking at the hourly chart again, that would be that TLP that we're observing on the M1 right here. And that is basically it for the pre-New York AM trade. Not the best of trades, to be quite honest. I will touch on it near the end of the video in terms of the M15 and M5 not having any framework. And then taking a look at the next 2 trades that I ended up taking during the AM session. Taking a look at the first one being Inception. Session being New York AM, M15 standard deviation for that sell side projection. We used the -2, -2.5 to locate a point of inception for us to have that buy side delivery motion. The first presented fair value gap of the PM session for Tuesday's trading was utilized. 15-second order block, 15-second standard deviation for that buy side projection. And then the first presented fair value gap of the AM session for Wednesday was where we were looking to exit out of the trade. So taking a look at the trade right here, entry off of that 15-second order block, had that deliverance. We were looking to exit at the first presented of the AM session for Wednesday's trading. And unfortunately, I was not able to capture this move entirely. So I ended up entering here. We had that deliverance towards the buy side. We come close to engaging with that first presented, but then we retraced back down into the range. And I had my stop loss at this candle's opening as there was an imbalance right here. I didn't want to see us displace below it. So even me getting taken out of this, I would have manually closed it. I would have manually closed this trade. We closed below this. Yes, we are engaging with this order block, but this is inception. I'm going against higher time frame order flow, and not just higher time frame order flow. I'm also going against my bias in terms of from yesterday, I was saying that we should deliver towards buy side and have that movement down towards sell side to engage with the new week opening gap. But of course, if the framework presents itself, the time is right, there's a clear drawn liquidity, it's more than okay for us to look to engage with this trade as long as we know that we're not taking this all the way up to these highs right here. This would simply just be a retracement. So taking a look at the analysis, this would be where I had the pre-New York AM session trade, and then I was taken out during this candle. This one candle, straight manipulation. And I was open to taking a re-entry if it served, but it did not serve a re-entry, and I'll touch on that if I remember near the end of the video. But standard deviation anchored from this candle's high down to this candle's low, -2, -2.5, and this is where we ended up taking that long position. Cracking correlation presented itself, which is a lot more visible on the lower time frames, and we're looking for that retracement back into this range right here. So we have that cracking correlation that we were just paying attention to right here. Cracking correlation presented itself, and here is your point of inception. This is where I'd like to normally position myself, and I missed this entry. This would have been straight up market execution. I missed it. But this is your point of inception, and acknowledging its point of inception, we have a swing low, swing high, series of down close candles, series of up close candles, change in stay in delivery, anchoring our standard deviation to this leg from this candle's low to this candle's high, -2, -2.5, -3.5, which aligned with the first presented fair value gap of the AM session for Wednesday, and then that -4, -4.5. So once I came to the acknowledgement that I missed the trade, I'm simply looking to see if there's any way that I could join in on the trade. So what ends up occurring is this down close candle that resides right here ends up engaging with this low on ES. So on ES, this down close candle engages with this low. NASDAQ fails to follow suit. And then we see the next candle close above this one down close candle, as well as closing above the first presented fair value gap for the PM session of Tuesday's trading. And then we return back down into both of those PD arrays, and I simply just entered off of the 15-second order block with my stop loss being at this candle's low right here. So I think this might have been 10 risk to reward simply because the stop loss was very tight. This was a point of invalidation. This low is deemed protected. I don't pay attention to risk to reward. I don't, I'm not fussed about risk to reward. Of course, there is some mechanical elements to it, but in relation to the way I'm engaging with price action, if I'm positioning myself at a point of inception and the structure says that that point of inception is invalidated at a 10-point stop loss, my stop loss is going to be 10 points, no more or no less, as well as the fact that if that same point of inception projects for 150 points to be terminus, my take profit is going to be 150 points or less. I'm not going to look to target past that point of terminus unless a higher time frame market maker model is unraveling itself out. But even so, that point of terminus on the lower time frame market maker model would be utilized for a short-term retracement on those lower time frames. But went on a tangent there. Executed off of that 15-second order block, simply looking to target the first presented fair value gap of the AM session for today. And we have that deliverance up towards buy side. We come close to engaging with it, and we don't engage with it. We end up fading it. Now, this deliverance up towards buy side, we end up engaging with an M5 PD array, and that M5 PD array being a SIBI displaced through time-based liquidity being London's low. Yeah, it displaced through London's low. So we end up utilizing that, retracing back down into the range, very deep retracement, and I end up getting taken out in just a small amount of profit. So I had my stop loss on this devil's mark, and paying attention, we can see how the body is being respective of that devil's mark. It's still supporting that bullish order flow. And the confirmation of the bullish order flow looking to continue is, for one, the inversion of this imbalance as well as the change in sustained delivery. Now, this would serve as a re-entry, but the risk to reward was not worth it. I know I just literally said that I don't pay attention to risk to reward. This would be a mechanical element to it. In terms of naked eye, entry being at this candle's open, I'm still going to look to exit out at the first presented fair value gap for the AM session of Wednesday, because that is what is projecting for terminus when we anchored our standard deviation. I'm not going to look to target any higher, as well as the fact that I'm under the acknowledgement that this move is not a reversal. It's merely just a retracement to continue that sell side delivery motion. So risk to reward, naked eye, this is about a 1-to-1. I don't find it worth it in terms of risking my capital to engage with a 1-to-1. I'm more inclined to engage with price action if it offers a minimum of 1-to-3. Sometimes I can justify a 1-to-2, but oftentimes it's minimum 1-to-3, and a lot of the times a minimum of 1-to-3 is going to be offered from that point of inception to terminus or even before terminus, but end up getting taken out with that retracement, and we end up delivering up to that first presented AM fair value gap, engaging with our point of terminus, and then we end up rolling over, and that is where I ended up taking my short position. So the short position that I ended up taking, I ended up getting stopped out of this trade on this candle right here. We deliver, engage with the first presented, and point of inception ends up establishing itself here. Simply entered off of a 15-second change in sustained delivery, looking for that deliverance down towards sell side. Now, I exited at the -2, -2.5, well, just under the -2, -2.5, because I speculated that the 10 a.m. candle was going to be a consolidation candle, in which it was, and I will touch on that again near the end of the video. So session was during the New York AM session. Hour 1 change in sustained delivery was utilized, M15 SIBI was utilized, midnight opening utilized, first presented fair value gap of the AM session was utilized, 15-second standard deviation projecting for buy side for us to locate that point of inception for sell side delivery. And then we're framing a 10 a.m. power of 3, 15-second inversion fair value gap, as well as a 15-second change in state and delivery was used as the entry mechanic, and 15-second standard deviation sell side projection. And then I was simply just targeting an M1 BISI. So taking a look at the analysis, the hour 1 change in sustained delivery, we have that 10 a.m. opening. We're framing the 10 a.m. power of 3. We see 10 a.m. opens here. We deliver up towards buy side, engaging with the series of up close candles, which would be our change in sustained delivery. And then on the M15, aligning our time frames, we're framing a 10 a.m. power of 3. So we're looking for 15-minute PD arrays or higher to be engaged with in order to, well, frame that 10 a.m. power of 3. We have 10 a.m. opening right here, and we deliver up towards buy side. We engage with the hour 1 change in sustained delivery, and we also engage with the M15 SIBI. So we can see that the hour 1 change in sustained delivery and the M15 SIBI low, they overlap with each other. This is nice to see, but we also engage with this M15 BISI that resides on the left side of the chart right here, which we displaced through during that 9:30 candle. So we deliver into that M15 BISI. And then the cherry on top, to be quite honest, would be that deliverance above midnight. We know that anything above midnight opening is deemed premium. Anything below midnight opening is deemed discount. And this is when we're referencing IPTA. So we had 10 a.m. delivering above that midnight opening, and then we have that deliverance down towards sell side. And then jumping in, taking a look at the 15-second chart, the standard deviation we had projecting for buy side to locate that sell side delivery motion was from where we executed the first trade, the same standard deviation. So from this candle's low all the way to this candle's high, we had that -3.5 aligning with the first presented fair value gap of the AM session. So we end up delivering into it. We deliver above our midnight opening, and then we come back down into the range, and then we deliver back into the M15 BISI as well as the first presented of the AM session fair value gap. Kraken correlation presents itself, and then we have a inversion of this 15-second PD array and a 15-second change in sustained delivery. Observing this chart, going on a little tangent, midnight opening is in alignment with the consequent encroachment of the M15 BISI. The hour 1 change in sustained delivery and the M15 SIBI low is in alignment with the consequent encroachment of this 15-second inversion fair value gap. This is simply just algorithmic. There's nothing more or nothing less to it. But we engage with the 15-second inversion for value gap, 15-second change in sustained delivery, and then we have that deliverance down towards sell side. Now, acknowledging this price action where our point of inception was established, all of this is occurring above our 10 a.m. opening. 10 a.m. opens right here. All of this price action is occurring above it. We're in a premium in relation to 10 a.m. We have that deliverance down towards sell side. Standard deviation projecting for sell side was anchored from this candle's high all the way down to this candle's low. -2, -2.5, projecting for these equal lows right here. We end up delivering, engaging with them, retracing back into the range to reaccumulate orders to continue that redistribution down towards sell side, and engaging with where I was looking to exit the trade. So this would have been the high of your M1 BISI, which was unfilled, and then we continue that deliverance to engage with our -4, -4.5 standard deviation as well. So yeah, that is about it for the executions during today's session. Lastly, just going to take a look at the commentary during today's session. So the first piece of commentary I sent in would have been this image, time 9 a.m., so 2 minutes past 9. And what I'd taken a notice to is the fact that, okay, for one, we'd engage with this -4, -4.5. This is a London standard deviation. This segment of price action is London. London forms its low. We have a series of down close candles, a series of up close candles. Standard deviation anchored from this candle's low all the way to this candle's high. -2, -2.5, -4, -4.5. We engage with that -4, -4.5, and then we have the inversion of this BISI, which displays through this buy side right here. And then we also have a change in sustained delivery followed right after as well. And the commentary was simply London standard deviation projection engaged, M15 inversion for value gap, and change in sustained delivery. And then in brackets, I simply stated that ES had not followed suit yet. So NASDAQ changed the sustained delivery on this candle. ES had not done so. This makes sense if we were to take a look at both of the assets. When I was in this short for the pre-New York AM session, ES and NYAM were delivering very heavy sell side while NASDAQ was being held above that 250 level. In order for these assets to move in sync again, it makes sense for NASDAQ to change the sustained delivery first, engage with it, invite that expansion before ES ends up doing so, in order for these assets to move back in sync and move in tandem again. So from the analysis I posted yesterday, I stated that we should have that deliverance up towards buy side, engaging with the previous day high, inviting for sell side delivery motion so that we can come and engage with that weekly opening. We can see how that -4, -4.5 projects for that weekly opening, deeming that terminus. Are we going to engage with it this week? To be quite honest, I don't know. I'm not sure if we have enough juice in the weekly candle to do so. It's not like we have a lot of high impact news that can invite for that injection of volatility. We do have high impact news tomorrow, so we can only wait and see. And like I say, simply just a lot more easier to take it day by day. So then I further went on to say that the standard deviation for sell side projection, -2, -2.5, was projecting for the Tuesday New York lunch low, and that would have come in right here. So that would be your Tuesday New York lunch low, -2, -2.5 projecting for that time-based liquidity, and then that -4, -4.5 projecting for that new week opening gap, like I just stated previously. And then I just said I was going to look to see what 930 does, as well as the fact that there was a lack of cracking correlations present at the high. So when I got taken out of this trade, I already deemed this manipulation. I'm looking at my M15 chart and I see that we've just engaged with that -4, -4.5. This is also another reason as to why this pre-New York AM trade was not the best of trades. We were not located at a point of reaccumulation, redistribution, or smart money reversal. Neither were we located at a point of terminus. So neither -3.5 or the -4, -4.5. But when I got taken out of the trade, I deemed this manipulation. I'm looking at the M15 chart. We've just delivered into this -4, -4.5. I would have been open for a re-entry within this segment of price action if a cracking correlation presented itself, but no cracking correlation presented itself. YM ends up offering that cracking correlation at 930. So 930 opens, ES and NASDAQ deliver down towards sell side aggressively. YM delivers towards buy side, engaging with this high, giving me the cracking correlation that I was initially looking for. But of course, 930, we were already somewhere down here around this segment of price action. We were drawing towards the London low, being this low right here. And then the next piece of commentary I entered in would have been put in with this image. So simply just the hour one chart. We have that London standard deviation from yesterday on the hour 1 chart from this candle's low all the way to this candle's high. -2, -2.5. This is where we took that short position yesterday. -4, -4.5, projecting for that 250 level very nicely. We can see it at -4, sits perfectly above it. And the commentary was hour 1 change in staying delivery, waiting for that 10 a.m. open to confirm. So the time of this image was sent in at 9:46, or the time of this image was taken at 9:46. I sent this like 10 minutes later because I was actually in the long position, but waiting for that 10 a.m. close in order to confirm that change in staying delivery, and already projecting a standard deviation from this candle's high all the way down to this candle's low, -2, -2.5, coming in at the equilibrium of the previous week's range, somewhere in a naked eye. So previous week's range from this candle's low all the way up to this candle's high, equilibrium coming in somewhere around this segment here, maybe just a little bit under. And then we have that -4, -4.5, projecting for that previous week low, which is basically what I stated right here. And then the last piece of commentary I ended up sending in, this was simply just after I took the 2 New York AM session trades. So inception, terminus, terminus, inception. Basically just stating that my long position, where terminus was for my long position, is inception for my short position. And yeah, that is literally just what I said as well. So my long position exit was terminus. I was taken out before price action delivered to it, but then terminus aligned with the higher time frame narrative. So basically what we had just gone through for the short position, the analysis, everything aligned for us to look to say this is a point of inception to continue that sell side delivery motion. And then the next piece of commentary, if I'm being completely honest, I'm just yapping here. The only piece of solid information was the fact that I stated the fact that I knew what type of deliverance I was in for during that short position, being a 10 a.m. consolidation. So I speculated that 10 a.m. was going to be a consolidation, in which it was, which we'll briefly take a look at. But yeah, that is basically it in relation to the analysis and the commentary. So taking a look at the NASDAQ right now, we can see we've had that very nice sell side deliverance down towards sell side, engaging with that London low in a very aggressive manner. We had that 10 a.m. opening coming in just right here. 10 a.m. being a consolidation hour, and it's currently power hour. I don't think we're going to do anything of significance if I'm being completely honest. We have this hour 1 imbalance right here. If we engage with this imbalance, you'd logically look for it to be utilized as a point of inception to continue that sell side delivery motion, as we are still framing deliverance back under this weekly opening to correct this devil's mark. Now, I'd assume there's a cracking correlation that is present here in order for us to invite that buy side delivery motion. So yeah, ES offers a cracking correlation, NASDAQ failing to follow suit, doesn't take out the New York AM low. But in relation to the pre-New York AM being a rather poor execution, this is where the execution was. There's a lack of framework. For one, there's no valid 15-minute standard deviation. The standard deviation would be here, but it lacks a clean cracking correlation in terms of swing high, swing low. The cracking correlation that was offered here looks something like this. YM ends up engaging with it. NASDAQ and ES fail to follow suit. So if we take a look at YM, we have that exact high on ES and NASDAQ where they failed to take it. YM ends up engaging with it at 9:30. Now, this can potentially serve as the high of the week, would simply just need for all the time frames to unravel out and follow suit. And then taking a look at that hour 1, series of up close candles, series of down close candles, change in staying delivery, standard deviation projected out in price, -2, -2.5, projecting for around the equilibrium of the previous week's range, -4, -4.5, previous week low. Can also look to grab a body standard deviation, which would just be a lot more precise or fractalized in relation to where we're looking to project. So we can see that -2, -2.5, projecting for that weekly opening. And then observing the M15, this range is no longer valid. We've already invalidated that range. Body standard deviation, -4, -4.5. We see this is where the day ends up collapsing unless power hour just absolutely dumps. -2, -2.5 of the wick standard deviation, that is also in alignment with our -4, -4.5. But as of right now, as it stands, I'm rather confident in terms of deeming this the high of the week. Initially, I was looking for Tuesday to frame that high of the week, but I ended up collapsing the trade early because I figured it didn't have enough framework to serve as the high of the week. This is enough framework to serve as high of the week. M15 framework has offered itself. Our 1 framework has offered itself, so would simply just look for the rest of the time frames to follow suit. So yeah, that is it in relation to the analysis for the trades for today.